stock has seen quite a decent run this year, up over 50%. We are joined by LV Prabhakar, the Managing Director and Chief Executive Officer at Canara Bank, to talk about the year to come. Mr. Prabhakar, good morning and greetings of the season to you. Before I talk about the outlook for the new year, I just wanted to, put forth to you a chat we were having with PNB Housing yesterday, where they spoke about how they are hiring a lot of people from Canfin Homes. And I don't know if you had a chance to listen to that chat, but are you seeing a lot of talent shortage, attrition at Canfin Homes, and are you doing anything to address that?
Let me tell you two things about the Canfin Homes. One, sufficient manpower is available in Canfin Homes who are trained, and it's a continuous process that we appoint and engage with the people so that we can take going forward good people who are experienced. And some people will be leaving. It is a part of the business and it is natural. Second point is, as far as Canfin Homes is concerned, now the business is very stable and growing at double-digit growth. And very soon, the MD CEO will be assuming the charge, maybe before this financial year. And he will be from the industry and he will be from the same financial sector. So we have no doubt about the performance of the Canfin Homes, and the attrition which we are seeing is common. It is within the tolerable limit. So not a worry. Yeah. Rather, we want some people to leave.
So that is, what should I pick on first? So new MD, good morning, Prashant here, Mr. Prabhakar.
That's a great way to put it. Right?
Yeah.
You want to go, it's fine. We want you to leave as well.
But how many, so could you tell us a little bit more? What's the excess, as you see it, I mean, manpower at Canfin Homes and I don't know how you think about this. And this attrition is happening at senior management levels, mid-management. Give us a sense.
Oh, I can say that it is very negligible. It is as per the trend. And this is what I know. And I think they are in a very comfortable position with well-experienced people. And the growth they are achieving, the double-digit decent growth, that itself is a testimony for the manpower which is present in that company. And I'm hopeful that company is going to be one of the best companies going forward.
Nothing unusual, right, is what you're telling us in terms of attrition. Got that. Now, this new MD CEO, you already know who it is, right, Mr. Prabhakar? Or it's a shortlist still? Before the end of this financial year?
It is a final stage of finalizing. And I think he will be taking over the charge within this financial year.
Yeah, so that assures all of us. Just one final question on Canfin Homes before we move on to business. You are not open to selling your stake in Canfin Homes, right? You all own about 30-odd%.
See, let us understand Canara Bank strength. Already my CRR is at 16.51%. And we are making about 2,525 crores NP every quarter. And I am sure going forward, the net profit will be in 5-digit figure per year. 80% of that will be going to my capital. So I am sufficiently capitalized. And in the last 2.5 years, we have raised about 20,000 crores of capital. So suppose I dilute my stake in any of my subsidiaries at this stage, I'm not going to get any benefit. And I see a lot of valuations in my subsidiaries. Going forward, I'll get at least 5 to 6x times what I'm going to get today. So I think board has decided that during the current financial year, we have decided not to dilute any of our stake in any of our subsidiaries.
Take dilution on the cards in any of the subsidiaries in the near future. Got that. I wanted to talk a little bit about the business as well, because, Canara Bank and many of your peers have done exceptionally well this year. I mean, it's a year where you have moved from dealing with NPAs back to a very strong loan growth. Tell us about what the year to come will look like. Are you seeing consistent double-digit loan growth? And is it both in corporate as well as in retail? What are the pockets of growth according to you?
I'm of the view that all banks, private and public, they are going to do very well in Q3, Q4 of FY23. Canara Bank will be doing exceptionally well. And as you have seen, on 22nd of this month, we have crossed 20 trillion size of the balance sheet. That is, there is a very good, decent double-digit growth in terms of advances and deposits also, especially retail term deposits. And financial year 23-24, I think it will be a very good year for the financial sector, especially for the banks. And I am more bullish on the public sector banks because balance sheet is very strong, it is future ready, asset quality is very good, underwriting standards have improved, net NPA, gross NPA has been reduced, OP is being increased, and provisions are decreasing. I think financial year 23-24 is going to be very rosy for all the banks, especially public sector banks and Canara Bank.
That's good to hear. Specifically for Canara Bank, if you can give us some numbers. There are 2 points, Mr. Prabhakar. One, some point to Canada's relatively weaker liability franchise, and 2, corporate loan book, which should limit yield expansion, margin expansion. Can you give us some targets, what you have in mind? We're already sort of wrapping up this calendar, maybe 3 months more this financial year as well. As you look ahead, what should we expect? Will these 2 factors limit your loan dispersal? What will loan dispersal targets look like? Or you think these are limiting factors to your mind?
First, I will talk about credit, then I will talk about the liability side. Credit, September, you have seen Canara Bank has grown at 20% YoY growth in credit. RAM has grown at 16.4%. Again, we have a principle in Canara Bank that corporate and RAM will be 55-45%. That is, RAM will be 55 and corporate will be 45. So that there will be a well-distributed credit portfolio in the bank. And as far as yields are concerned, our NIM, we are already at a 2.86 quarter-wise, and we are confident that 2.90 will be crossing. And as far as NII is concerned, we are growing at more than 18%. September, we have grown at more than 18%. Going forward, I am confident that the percentage will increase further. So yield and advances, corporate or retail, we are earning a lot. And NII is the testimony. Apart from that NII, non-interest income, another NII, we are very strong in that. We earn about 4,500 crores every quarter. So going forward, as far as the yield and OP is concerned, we are on a very strong footing. Now coming to the liability side. 7th October, I have increased the retail term deposit rate to 7% for general public, 7.5% for the senior citizens. When the market rate was only 6%, 5.8%. In 3 weeks, we have garnered huge amount of retail term deposits under 666 scheme, that is 660 days scheme, and also 1 year, 1.5 years, 5 years. So liability side, as of now, for coming 2-3 quarters, Canara Bank is very strong, and it can support my credit growth of 20% plus. So the thought of Canara Bank being weak in liability side is, I think, based on the figures, it is wrong. Thank you.
Could you tell us in 3 weeks, what is that amount? You said there's been huge accretion to deposits because of the hike in deposit rates. Could you tell us how much is coming?
A trillion.
Sorry, you'll have to repeat that, so we missed that.
More than 1 lakh crores under retail term deposits.
In 3 weeks.
Yeah.
Okay, more than 1 lakh crore raised in retail term deposits in 3 weeks. Just wanted to know, with everything looking so hunky-dory, you've guided for 20% plus credit growth with NIMs actually expanding to 2.9%. It was 2.83%, which was a 9-quarter high in the previous quarter as well. The potential risk could come in from asset quality. So could you give us some sense on, the guidance for asset quality? What are your credit cost expectations for the year going forward? And any sort of expectations from recovery coming in from the NCLT assets over the next 12 to 18 months?
Let me talk about the asset quality. We are very conscious about the risk-weighted assets, RWA, which will decide the future of any asset portfolio. Our RWA is just 66%, which is one of the best in the industries. And in corporate portfolio, A and above rated percentage is about 77%. So quality-wise, we are very conscious and our underwriting standards are very good. So if you see my net NPA, it is 2.19. And we said that in our guidance that very soon we will be less than 2. So asset quality-wise, we are very strong and going to further also we are going to maintain the same standards. Now coming to the NCLT accounts. I think every quarter we'll be getting about 400 to 500 crores from NCLT either through resolution or through liquidation. And I think this will continue. And there will not be any major recoveries from NCLT which will be in a 5-digit figure. So I think I are in 4-digit figure. So it will be around 400 to 500 crores in the coming 1 or 2 quarters. So asset quality is going to be very good for Canara Bank. And the net NPA we are trying and working hard to see that it is less than 2 and gross is less than 6.
That's great to hear. Asset quality will improve. Coming back to, loan growth and corporate capex, I wanted to check with you, has corporate capex come back in a big way, or is it just the old projects that are getting, refinanced or loans over there? Trying to understand, because we do hear of green shoots, but we know that a lot of it is coming in through, say, government capex, and corporate has not come back in a big way. Your thoughts?
It has come back, but as you say, it is not in a big way. But basically, our loan growth, we are more focused on infrastructure, where again corporates are there, but these are all HAM projects, and we have underwritten more than 40,000 worth of HAM projects. And the second one is we are a bit aggressive in steel, and also we are taking nowadays exposure to commercial real estate also because we are growing at 17% in housing loans. So naturally, we want to finance commercial real estate residential so that we will get housing loans also. So I think there is good traction as far as corporates are concerned. And green shoe projects, yes, we are getting, but not on a very large scale.
Okay, we will leave it at that, Mr. Prabhakar. Thanks a lot for joining
just
us.
one thing, Mr. Prabhakar, just one thing. You on that stake sale issue, you said nothing in the near term, nothing in this financial year. Is that sorry, go on. Sorry, go on.
During the current financial year, because board has decided that during the current financial year, we will not be diluting our stake. Next financial year, board may take a different view or same view. That depends on the board.
With the new MD in charge?
Sure.
Yeah, okay. All right.
It's interesting that we get market guests, etc. They give us stock ideas, but here he's saying that I won't sell it now. I see value of any time between 5 to 6 times on the current assets that we are holding, only then will we liquidate. So perhaps, is that a message that he's giving to the street as well?
Absolutely. I mean, for Canara Homes, Canara Bank is seeing great value. Industry professional from the, current crop. Of course, I mean, we won't have a name, but will be appointed as MD Canara Homes before the end of this financial year. Deposit accretion has been very strong, and of course, numbers all are looking very, very good. A very confident-sounding commentary. Thank you very much, Mr. Prabhakar. Appreciate you joining in on the program. Wishing you all the best for the new year from all of us here at CNBC-TV18. Thank you. Well, let's take a quick break here. The market is still down, 14, 15 points. 18,115 is where we are at. We are back with Pramod Patwari of Balrampur Chini. That's the other that's a top sugar name. But it's not just sugar, it's ethanol as well. The distillery segment is what many are very excited about. We'll talk about that with the management of Balrampur. Later, we'll also connect with the management of Gokuldas Exports. The stock is, recently languished a bit. They're big apparel exporters to the US. We'll get a check on how business is doing. Stay tuned. 2 interesting conversations up next.